Hey guys, today we are going to talk one of the important topics in our channel. The channel revolves around this topic. That's why we wanted to give you this, step-by-step approach. So we wanted to talk about how do you start your investing journey. Uh, in order to make money and get a financial freedom, like you have to invest, you have to multiply your money. That is the one, that's the most most people use that way to make money, become rich, and become financially independent. But most people don't know how to do it. Most people are like, they just go here and there, and they don't know how do you do it from step by step. How do you, like, where do you start and where do you go and what's the next step? And that's what we're going to cover today. And this video will probably give you a lot of insights and a lot of mentoring. You don't need to even look for all those videos in YouTube if you just follow our advice here, right? uh, we are not a financial advisor, and just wanted to remind you guys, but we have gone through things in a harder way, and we learn things in a harder way. So we these are from our lesson, like life lessons. We learned all these things. That's why we are giving you, this will work for sure, because we've been there, we've done that. Let me share my screen, and so you know exactly what are the points that we are going to talk about today. um, Randy, let me know if you
Yeah,
can.
I can see your screen, Venkat. Yeah.
Okay. So I'll just get a head start, and then Randy, you can jump in between. So the first thing is, investing is not a overnight thing, right? Everybody, you need to keep that in your mind, just inside your mind all the time. It's not an overnight thing. It's a long-term commitment. You need to commit yourself for the long term, probably 10 years. We are talking about at least 5 to 10 years. That is the goal. And those 5 to 10 years, maybe longer, right? But that is a long-term commitment. And you also need to know, what is your goal? Like, why, like, what's your life goal? Probably in terms of financial goal, within your life goal, right? What is the financial goal? What do you want to achieve? What do you like? Do you want to be financially free in 10 years? Do you want to do travel around the world? When you travel around the world, you probably cannot work, right? So how do you support yourself? All those planning and your life goal, your all those things needs a lot of your effort, right, on your side. That is important. And so
And the
it's
only thing I would add to that, Venkat, is like, some people have short-term investment goals too. But our channel, what we encourage all of us to do is to retire early, right? To
right.
achieve the financial independence as soon as possible. So for that, you have to have a long-term plan. And again, you can obviously have short-term plans, but our goal is to get to the retirement as soon as possible, probably as young as 35, and so the
Exactly, right.
long-term plan, having a long-term investment plan is the way to go.
Yeah, that's a good point. Actually, I didn't say that. So start early, like as early as possible, maybe in your 20s. Early 20s is the best time, maybe even earlier if you can.
Yeah.
If your parents are not financially savvy, you should read like a Reddit, Quora, or other medium.com. Those are the forums. They all the millennials. There are a lot of mentoring going on there, right? You just go there and spend an hour or so in your teenager, in your when you're in teenage. You are going to be in a very good shape if you understand what they're talking about, and you have to keep reading for an hour or so every day to get to that, right? It takes a long time to understand everything.
Yeah.
So the investment plan, we are going to give you that today. This is going to be, this looks simple, but it'll work if you do it right. If you follow that step-by-step approach, right? That is what this is about. So this is the only thing that you need for 5 to 10 years. If you can work this out, you should be in a good shape to retire early and be financially free. So the first thing is the emergency. Make sure you have an emergency fund for 3 to 6 months. So if you are in a, if you came out of college or you started working after your high school, you need to see how much is your expenses, monthly expenses, and you need to have 3 to 6 months uh, expenses in a high yield savings. That is the liquid, right? You can take it out anytime if you need it. That's an important thing. Most 80% of the people don't in US don't even have $1,000 in the savings account, right? They don't
Right.
have a liquid. They go with the credit card. They go with the month to month. They don't have extra $1,000 in their bank account. So
And
think
this is
about
exactly how you might even be homeless, because
it.
imagine if everything goes for six, and you don't have anything to pay for your food or mortgage, nothing, and you're literally on the street. So you that's why we, everyone, not just us, right? I mean, it doesn't have you it's not rocket science. You have to have 3 to 6 months expenses in your bank to cover
Right.
expenses in your bank.
Even if you, yeah, in case if you lose a job, it takes about 3 to 6 months to get another job and
Yeah,
join.
yeah,
Until
exactly.
then, you have something to go with. And this is, you need to just put this in, somewhere, right, in your mind. So if you want to be financially free, retire early, to retire early, then that's a fire, right? FIRE. You need to have 25 times of your yearly expenses. Let's say your yearly expense is $50,000, right? 25 times of that is $1.25 million. So you need to have $1.25 million. It can be anything, right? Real estate, investment, or stocks and bonds and other things. As long as you can get average 4% or more return, right? If you get 4% or more return in that $1.25 million, then the total assets, $1.25 million total assets you saved, say when you're in 30, you saved 1.25 million, then you can, your expenses is only 50,000 a year. You can possibly retire that time, because every year you can able to withdraw $50,000 from your bank. Say in the January month, let's say January month, you can withdraw $50,000. By the December month, you will have $50,000 more in that account, because it's 4% return on investment, right? Average. It could be more, but we are talking about 4%. That's kind of like a very minimal return on investment.
I think you shared that four. Is that what you call 4% rule?
4% rule,
Right? Yeah.
right, right. So that is the thing. If you wanted to have very, like, you wanted to have a lavish life when you retire, you probably need to have 50 times more, like $2.5 million. So you have $50,000 extra to spend. If your expense is only 50,000, but you have extra $50,000 to spend. That's the thing. And we are going here. This is another critical thing that you need to take a note of, right? Where do you invest? Like, people don't know where do they invest. Like, this is our way of telling you guys, you can always change this percentage. I know some of the younger generation, they may need to increase some of the other things, like probably real estate they can increase, and some of the other things that they can adjust these, right, based on your need. But these are some of the components that you need to have money in it. Say, for example, like stocks, ETFs, index funds, bonds. Put 25% of your your like savings, right? Like, for example, you're making $5,000 a month, your net income, you're bringing in. So you take, your expenses is like only $2,000. You have $3,000, right? Yeah, 3,000. Out of $3,000, take 25% of it and put it in different. This should be all automatic. You can just from your paycheck, you can automatically send these things to the right individual stocks. Like, maybe you're buying Apple every month, once a month, maybe 5 stock Apple, 5 of the ETFs, some of the ETFs that you're buying, and then 2 index funds you're putting money in it, bonds, some money you're putting in there. Like, those are the things that you need to automatically save 25% of your saving, the money that after your expenses, right? Also your 401k, IRA, and Roth. Those, if you are investing in that, and you should be putting at least like 15%, 10 to 15% is should be there. Don't forget that one. And the real estate, like you could actually keep the money, 40% of it, right? Like 1200 out of the 3000 you're saving, you can put that aside, and 1200 will become how much? 24,000. 1200.
1200 into what?
Sorry, yeah, 1200 every year is like around 12,000,
Wait a minute, like
13,200.
what month, one monthly 1200 into
No, no,
12?
no, whole year, right? Whole year, you will be around, I think 15,000, around
Yeah,
15,000
yeah,
you have,
yeah,
right?
yeah.
So that is your real estate investment. You will be using that for putting that money into real estate rentals, right? That we are talking about 10-year plan. This is like a 5 to 10 year plan based on, if you are making more money, you can achieve that in 5 years. If you're making less money, it takes 10 years for you.
And like you said, Venkat, these percentages are just, it just the things that work for us. And obviously you can tailor it to your needs or your comfortability. And but again, another point you said is, I want to highlight that sometimes it's better to push that 25% or 10% or whatever from the paycheck automatically. Because what happens is that when you do your expenses, and after that if you try to save, after that if you try to put these percentages, it might not work. So because that, make sure that it's always better, not make sure, like it's better to make these percentages go out of your paycheck automatically.
Yeah, it can be before even, like, yeah, like you said, right? You normally do that before even expenses. You
Yeah.
do automatic withdrawal. Then you have a very
You don't have any other option, right? You know that you already pushed this aside for your savings, and you only have, let's say, $1,000 to play with for your expenses. So now you'll be vigilant, and you'll be
right.
careful managing expenses too. And at the end of the day, what I have realized was, I even was able to save some part of my regular expenses too. So so
Exactly,
that's
right.
the beauty of it. But you have to be disciplined, of course. There's always possibility of being off track, but it's easier to get back on track if you do this way, through personal experiences, of course.
Yeah, that's a good point. I also, like, yeah, I used to live like a poor person, even though I was making enough money. I
Yeah.
had extra money. Even now, I'm trying to live like, very moderately, right? So that's the thing. Like, you can live moderately. You don't need to spend lavishly on dinners and stuff, unnecessary things that's going to, destroy your financial
Venkat,
life.
I know this story will take 1 minute extra, but I still want to,
Sure,
you
yeah, good.
opened up a good point. Watch the movie Company Men on Amazon Prime, or it was on, yeah, Amazon Prime, and it was on Netflix too.
Wow.
So, big guys in big companies, what they do is, when they're at a certain level, like the executive level, they change their lifestyle. Like, they take private jets even to go and shop in Florida. They
Wow.
take private jets to go on shopping. And in the, like, if I really hope it doesn't happen again, but in the crash, like 2008, when the economy crashed, their
Mm.
stock prices, went down, and it
Right.
affects, like, and
Everything down, right?
yeah, and one of these big executives had to commit suicide. He had a beautiful house, two daughters, was about to go to a high school exchange student program in Italy. They could have done that if not for the crash. But what happened was, like, they were living beyond their means. But
Yeah.
really
Right.
appreciate you shared the fact that you wanted to live moderately when you still have enough money. Think about your future. Think about, what if, the big if is still out there. So make sure you don't live beyond your means. Just make sure that you live moderately. In a very difficult situation, you'll still be able to manage. You don't have to go to the extent of committing suicide. So no, that's just absurd. These
Yeah,
are
that's
big executives, big guys. They and they drive Porsche, and all those fancy convertibles, which is like $100,000. And
yeah.
you know
That's true actually. Like, some people they think that, oh, there's no tomorrow. I want to enjoy
yeah.
today.
Mhm.
But like if you keep yourself intact, you like you're not going to be there to enjoy tomorrow. Like, you know, if you try to spend everything. Um, that's exactly true. Yeah, thanks for that. So last two things that I just want to mention, like these are some of the components, these are some of the elements that you put your money in, it multiplies your money, right? It
Right.
multiplies. Like stocks, we already talked about, if you put some money in some of the big companies stocks 10 years 20 years ago, you would be millionaire, right? Few $1,000s. So those, like these things multiply, and that's why we are telling you guys, like based on how effectively you put these things within your financial portfolio, right? You have to create a portfolio that is going to be successful for your case. In your case, maybe your husband, wife, like you may like you have to discuss yourself and then come up with that different plan and put those money every month, right? Every month, and within 5 years, you won't believe it, like your money probably grown a lot, and you probably have like 500,000, almost $1 million. If you didn't take those steps, you probably spend it on a luxurious car or something, probably money you don't even know where the money went. If you plan ahead and you follow this advice and take leadership on all these things, then you probably will be better off in 5-10 years for sure. And so there's some of the other things like gold and silver is always going to be there. It's a very precious metal, and now the price is really high. But what you should do, like these are the things that you can do every month, right? Every month, set some money. You can even buy coins online. Like if you only have $200, buy a gold coin, or for tiny bit, maybe 1 gram or less than a gram. I don't know how much you get. um, for the gold, silver coins. There are Canadian silver or different silvers online. They sell it, and keep on buying those coins and put them in your, wherever you want to save them, right?
Right.
That is kind of that's going to give you a benefit in the future, because the price is always, if you look at the gold price, it was just going up, never went down. Like it was always linear, right? That's one thing. And then the cryptocurrencies also, we talked about it. Just don't put more than 10% of your total investment in the cryptocurrency. The lower is better, but you have to put something in there, at least few $100s, because things goes like 1000x, 100x. Sometime you can retire early, like maybe instead of 5 years, even 2 years you can retire if you're really lucky.
Yeah.
And the last couple of points I just wanted to make is, after you are doing the dollar cost averaging, right? Every month you're putting it, and don't think about it whether the one of the month is really high. Don't worry about it, because that 10 years ago, the S&P was, people are thinking it's really high, but it's so high now, right? It's going up. um, so it's going to be going up all the time. It's not going to, it's like, even if it goes down a little bit, it's going to come back again, right? So don't look at the market up and down, and don't get distracted with these news and other things. You put like $100, if you want to put on cryptocurrency every month, just do it. $100, that's it, right? You don't need to worry about whether it's a low, whether it's really high, or don't need to worry about it. Because in the long term, it'll balance out everything. And make sure you have coverages, insurance coverages, because you're doing lots of investment here. You don't, like, we don't want you guys to lose your home, lose your auto, and then you have to spend all your investment on the home, right? If you have insurance, good insurance coverages on those, even you spend $1,000 a year on some of the things, right? It covers like 200, $300,000 damages, right? So that's a good investment on that. So that's why make sure you have insurance coverage, even have umbrella insurance for everything, right? It covers like home, auto, health, not health, like home, auto. And then make sure you have a good health, invest on your health, and also invest yourself, your education and other things, while you're doing these things, right? Once you do all these steps, I think you will be in good shape in 5 to 10 years. I think this is a journey that you should take. But you can customize it whatever the way that you want it. But these are the steps that we wish we would have taken it 20, maybe, I don't know, 15 years ago.
15,
Right.
20 years ago. That's right. Yeah.
Right. So we just want to give you guys, if you're in your 20s, just take it, run with it.
Right. I like that.
Right. Yeah, thank you guys for watching. And anything else to add, Randy?
No, Venkat, I think we covered. I think we kind of went over, but still good information.
Right. Thank you guys for your time. Bye now.